Okay guys, I will be doing something a bit different today. Something I haven't actually done before, which is record on the go. I've actually never created a video on the go. So right now I'm currently on my break and I am going to be reviewing Monday's price action specifically for ES. I know that it would be better to compare and contrast ES and NQ, but what we're going to be doing is just having a look at ES only. So I've mapped out the dealing range low and the dealing range high, and as you can see, the equilibrium is located at 5,490 and a quarter. I'm just going to be keeping it nice, short and simple, since this dealing range is within the 5,000 region. So I'm going to, in order for simplicity purposes, I'm just going to say 490. So the median point, so then the area in which you would classify a discount array would be below 490 and a quarter. So anything below 490 whole would be deemed as a discount on a macro time frame, due to this being the daily time frame. Now, just above the equilibrium, we do have a volume imbalance. Now, this volume imbalance has not been filled via a candle formation. So I do believe that leading into the end of the week, we would see a chance of the price action repricing down to that area. 5,500 is my first point of interest for the week, and 490 and a quarter would be my second point of interest. What we're going to do is have a look at the intraday time frames and have a look at what actually has happened, because I did place long capturing the move from 525. It was only four handles, I'd say. But then the overall goal is to target for $250, which is 5 handles, so the low hanging fruit really does help. So what we can see is the lows that was printed for last week, which is at 519, and we've got the highs, the intraday highs for the week, right, which is at 545 and 3/4. Now, what we see here is a classic breaker, because what we have is, okay, so we have the low, we have the high, higher low, higher high, all right? But then if you was to account for the bodies, then you would say that it's a high, low, high, high, low, low, higher, high, because we took stops right there. So this formation here, for the mere fact that the candle bodies are lower than all the other candle bodies, and I do understand that the wick is still holding structure, but the candle bodies is what we're looking at, because the candle bodies is what tells us the full story. The wicks is the manipulation, right? It doesn't tell us the full story. So A, B, C. So a knee retracement, which we did get, which we traded into the last down close candle, just shy of the higher time frame sell side liquidity, would have been a long straight to the intraday equilibrium, which is right there, right? So what we got was the lowest down close candle, which is a bullish order block. We got that, traded back up into the area, failed, sold off, failed to create lows, traded back up to the upside, traded into the upper quartile of that order block, because remember, the order block still hasn't been traded through to and through, right? So it's still valid, right? Sold off, we created another low, candle body low, but the wicks held overall market structure, right? Now from there, led into Monday. So Monday's open is there, right? The lows is right there. Now, what happened here was, this is the hourly time frame, right? We ran into the order block, took buy side out, intraday buy side out. Now, because there's choppiness around 525.5, and sell side has already been taken once, twice, right there. Plus the highs has been made after this order block. This is a bullish order block, right? After this bullish order block was printed, right? Then what you'd want to see is a retracement, which we got right there, but we failed, right? Because we not only did we wicked maybe 95% into this candle here, but this candle would have took us out, and this candle right here, if we never had longs at this area here, right? And we got the highs because we're still in a buy program. The reason why I say so is because you got this order block, broken, shifting market structure. Come back, retest, shifting market structure right there. So we got 1, 2 forms of signature in price action to indicate to me that there's a good chance that we could continue to the upside. Where to the upside? 553. What is 553? It is the dealing range, intraday dealing range high to low. It was really Thursday's high to the lows. Which, remember, this was not there yet. So, highs, lows, equilibrium, premium array. The premium array I was really looking out for was 561. We never really got that. 553 was attacked. We failed to close above that region and we sold off. And once we saw that, right, after taking intraday highs, which would be 1, 2, 3, 4, trading into this equilibrium as well. Imbalance in price as well. So that's filling the gap right there, right? We sold off. Creating an imbalance right there. 1. I wouldn't classify that as a shift in market structure, but this would be a shift in market structure. So this candle here, shift in market structure. Candle body here, created another fair value gap. So this is a fair value gap. Sell side imbalance, buy side inefficiency. And we've got right there, this candle right there is an institutional order flow entry drill, because we ran up into the higher displacement fair value gap, but we failed to get into the medium part, consequent encroachment of the fair value gap, which shows the weakness in ES to continue to the upside, and we sold off and we closed below 525. This was all foreshadowed beforehand anyway, so what we're seeing now is not a surprise. Going into the future, what I am looking out for is this gap right here to be reclaimed, but not fully. I'd like to see at least halfway of the fair value gap, which is the consequent encroachment respected, which would be anything from 543 upwards to 544.25. I'd like to see that pan out. I'd also like to see this field 525.5 tested, and possibly discount prices up at this fair value gap filled, but I would not like to see this opening gap filled because it wouldn't show signs of strength to the downside. We've already broke below a higher time frame sell side liquidity pool, so I am expecting a continuation to the upside, a minor rally intraday, and I will keep you guys updated. First point of interest, 522.5. I'll place alert. I do believe price will reach up there today. And my second point of interest would be 525.5.